In the second part of our interview, we're going to talk about Bitcoin. And I didn't forget about this. I wasn't going to let you off the hook without talking about Bitcoin. You wrote an article recently, The 7 Misconceptions About Bitcoin. Fascinating read. First of all, before we get into them, what motivated you to even write this article? You must have been getting some mail or some feedback about Bitcoin that prompted you to investigate this.
Yeah, pretty much. So I turned bullish on Bitcoin in April of this year,
Yeah.
and then I wrote a big public article on it in July. And so naturally, because it got a lot of press, I got a lot of emails or Twitter comments, whatever the case may be. And so I would start by responding to a lot of them individually. Then I realized I'm answering a lot of the same questions.
Yeah.
And so I was like, let me put a lot of these together into an article that I can refer people to kind of take my stab at addressing some of them are misconceptions. Other ones are, they're rational, but they're just risks. They're risks, and it kind of dives into kind of how significant those risks are, or if they can be managed.
Okay, let's go through some of them. So the first one here is this is well, I'm going to start with my favorite one, which is, it's not the first on your list, but it's my personal favorite. Bitcoin's intrinsic value is 0. So let's I can see where the argument comes from, right? It's a digital asset. It's based on computer code. The argument here, if I understand, I'm not really sure if there's one single argument for this, but one of the arguments is that this is a man-made fictitious product that anybody could just generate using algorithms in a computer. So why assign value to something that can be easily made in your living room?
Yeah, so this is something I struggled with a little bit in 2017, and that's because we were seeing dilution. So we were seeing other coins capture some of the market share, and we were seeing splits within Bitcoin itself. And so I was interested in the space, but I avoided investing in late 2017, which ended up, in hindsight, being a good decision because it had that kind of multi-year consolidation and high volatility. Now, over those couple of years, though, we've kind of answered that question. So Bitcoin's network effect is very strong, and that's what really separates it from just about any other coin. And so, anyone can technically copy. Bitcoin's open source. You can copy it. You can run it. It's kind of like how you could copy Wikipedia, and you could run it. The problem is getting traffic to whatever you're doing, and sort of a community. And so with Bitcoin, you have over 10,000 nodes around the world running it, and some estimates are far higher because not all of them are visible. And so that can't be replicated just by copying the code. It's really about all the software that's designed to work with that particular protocol, as well as the developer community and the company ecosystem around it. So hardware support for it, security solutions, exchanges that accept it. And so that one particular protocol has developed such a strong network effect relative to all the other coins. And that's why over the past decade, 5,000 coins haven't been able to really take a lot of market share from Bitcoin.
Bitcoin is a bubble. Okay, I can see where this is coming from. I mean, it technically was a bubble in 2017. Is it still in one now?
No, for the most part, no. And part of the answer to that question is zooming out. And so it's like a bubble in the near term, especially if you're looking at the linear charts. You see this thing go from near zero, and then it skyrockets all the way up to 20,000, then collapses, and it looks like a bubble. Yeah. And that was actually, again, my concern back in late 2017 when I initially covered. I was like, this came really far, really fast. There's lots of euphoria. But if you zoom out and you look at the logarithmic chart, you can actually see that Bitcoin's following a very rhythmic pattern ever since inception. It tends to have these big blow-off tops every 4 years, and then it corrects, and then it consolidates, and then it eventually shoots up to another high. And so actually, when you zoom out, that 2017 high didn't look any different than its high from 4 years before that or 4 years before that. But that's the one that really kind of captured media attention, and that's the latest one. So if you look at the linear chart, the other ones pretty much disappear. So I would advise people to look at the logarithmic chart in terms of kind of developing their long-term, whatever technical trends they might be looking at.
Yeah. Okay, that's a good point. The governments will ban Bitcoin is another point that you've made. This is something I hear all the time. Bitcoin has been used for illegal purposes throughout its history. But the counter argument to that I've heard is that, well, so has the fiat currency, so has gold. You could use a dollar for illegal activities as well, right? There's no particular reason why you have to ban Bitcoin.
Yeah, ironically, the dollar's better for illegal activities than Bitcoin because Bitcoin's a public ledger. And the FBI and others have gotten increasingly sophisticated in tracking on-chain transactions. Combined with know your customer regulations, they know a lot of the entry points into Bitcoin. And, so they can unravel some of the initial transactions, but a lot of the later transactions, they're able to follow that pretty closely. And so Bitcoin's actually one of the worst mediums you'd want to use for illegal activity these days. And as far as regulation, I think there is increased risk of regulation around kind of custody solutions and things like that. But the probability of an outright ban in many kind of major markets at this point, I think, is pretty low. And ironically, the bigger it gets, so people are concerned that if it gets too big, that's when countries might, outright ban it. But the problem is, once you have the Stanley Druckenmillers of the world, once you have Fidelity, once you have BlackRock, as you get bigger and bigger billionaire investors and multi-trillion-dollar institutions that are invested in Bitcoin, that actually gets harder to ban because now, even both the retail investors and the large kind of mega cap like donor class is also invested in Bitcoin, and so that's increasingly
Yeah.
increasingly disruptive if they try to ban it when it's that big.
Yeah, the other argument, you didn't mention this explicitly, but the other argument I heard against Bitcoin is that the supply isn't actually technically fixed. Well, it is, but in the sense that you could create forks, you could create other coins. I think the argument is generally more for cryptocurrencies at large. You can, it's not impossible to create new forms of digital currencies, and so this ability to create new currencies inherently makes the value very, very low because the supply is technically unlimited. Can you comment on this? As opposed to gold, for example, there's only finite amount of gold in the ground on Earth.
Yeah, so this gets back to the network effect thing. So if you were to fork Bitcoin, for example, you can't fork the whole tens of thousands of nodes. And so that's why actually, if you look at the number of nodes that those forks have, Bitcoin Cash or some of the other derivatives, they have a much smaller number of nodes than the core Bitcoin protocol. And that's because they were unsuccessful at forking the community, even though they can fork the open source software. And so it really comes down to any sort of threat that can fork the community and fork the nodes should be taken seriously. But so far, all those attempts haven't really been able to take market share.
Yeah.
And that's why, as a market cap percentage, those forks did not really retain their value relative to core Bitcoin.
Another argument that I've heard recently in the last couple of months is that as Bitcoin rallied, capital flowed away from gold into Bitcoin. That's part of the reasons why gold was down. Now, my issue with that argument is that if you look at the size comparisons between Bitcoin and gold is a $9 trillion market, whereas Bitcoin is hovering around 200 billion to 350 billion, depending on the price of that day. So they're not really comparable in terms of market sizes. Do you think that the sizes of flows into Bitcoin are substantial enough to drive gold down?
Probably not alone, but around the margins. And so the way pricing works, of course, it's always the marginal buyer and seller that really kind of sets the prices. And so most gold's not moving, and it's really about that liquid portion of gold that is trading hands. And so, I don't think it's Bitcoin alone that stole its thunder. I think it is it's Bitcoin. It's they're kind of a recovery in some of the other natural resources we've seen, like energy, copper, and so we had kind of a really strong period for a lot of those other things.
Mm-hmm.
And Bitcoin, went pretty much vertical during that, kind of November period before it had this kind of recent correction. And so I think it's more of a combination of multiple of these outperforming assets that might have led to gold's kind of temporarily decoupling from real rates.
Well, if you don't think Bitcoin's a bubble, do you anticipate prices to potentially move even higher from, well, it briefly touched new all-time highs earlier last month, or this month rather. Can it continue from here?
So as a base case, I still expected to have a pretty good 2021. I warned in my research service back on November 22nd that it's probably due for a near-term correction just because it was rather overbought and came very far really quickly. I started to see a lot of euphoria, and we've kind of had that consolidation, that correction. And so I'm watching the $20,000 level very closely because until it breaks over there, it's at risk of further corrections and consolidations. Mm-hmm. But once it punches over 20,000 firmly into new all-time highs, the ceiling above that where it can go is rather high. And so I don't know if that's going to happen next week or 2 to 3 months from now. But as long as it kind of does that over the next several months, then I think the bull market's intact.
I have to ask you this, even though I know this is a hated question amongst the investment community. Bitcoin or gold, which one would you prefer as an investment vehicle for the next year?
So I like both. I own both. So I think that in 2021, probably Bitcoin has more upside potential. And so for investors that can manage their position sizes appropriately, I think Bitcoin offers a lot of opportunity over that specific time frame. But I like gold, I like
Mhm.
Bitcoin, I like silver, and I like some of the other industrial commodities as well. So I like to have a degree of diversification so that if any one thing's not working out like I expect, the overall basket still does well.
You can learn more about Lyn's work on lynalden.com, where she talks more about Bitcoin and macroeconomics and her market outlook in depth. Thank you, Lyn, for coming on the show today. It was a great talk.
Yeah, thanks again for having me. Happy to be here.
Thank you for watching. I'm David Lyn. Stay tuned for more.